or there was some kind of bid rigging. It affects all of us. Or whether you're the unfortunate victim of fraud that has left your business in tatters. You see so many businesses in the newspapers all the time, and they have been affected by fraud, sometimes irreversibly. So this is an important topic, and I'm really excited to be taking you through part 2 of today's webinar. There's 2 more parts, and what I'd like to say to you now is those of you who've registered for part 2 will automatically be registered for part 3 and part 4. So you won't have to re-register again, and we will look forward to seeing you again for the next upcoming webinars. A brief profile about myself. I think my colleague Moses already has told you about my background, so I won't dwell on that. I'm going to start off by recapping from the lessons from part 1, and then we're going to play a little game, and it's called Let's Play Corporate Fraudsters, and we're all going to participate. So you're not just going to be sitting back and listening to me talk, but I'm going to get you to role play, and there are some interesting role plays coming up, and you'll all get a chance to wear a hat of a particular role. And let's see how that goes in a few minutes. And then we'll talk about people and fraud, and what does it mean? Fraud is not just a dry concept, it's a real thing. But for a lot of people, until they're actually affected by it, they don't see the danger around them. They know it exists, but they don't see it coming until sometimes it's too late. So that is going to be a very interesting topic to look at. And then we're going to look at the early warning signs of fraud, some of the red flags in fraud. We'll also look at victim organizations and how they responded to fraud. And then we'll go to the very interesting topic of fraud detection and anti-fraud controls. And finally, we'll look at case results. What actually happened in the organizations that had fraud? How did they deal with the fraud, and what was the outcome? So let me also take you through, let me whet your appetite for the next 2 webinars. In the next webinar, we're going to talk about my experience, my actual experience in fraud, and some of the lessons learned, and that is going to be featured under the heading Tales from the Dark Side. Fighting fraud, as you know, is not everyone's cup of tea, and it does come with its own inherent risks. And I'll be sharing some of those with you in the next webinar. We'll also look at a fraud prevention program, and I'll be giving you lots of guidance. So this is one not to miss. Lots of guidance about how to prevent fraud with a complete checklist of what you can do. So excellent advice. Please come and take this advice. It's available for free, so don't miss out. We'll also look at the roles and responsibility in prevention of fraud, both at the employee, manager, audit committee, and director level. And we'll have an online survey during our next webinar for fraud prevention checkup. So all of you who attend the next webinar, you will be able to gauge how your organization is doing based on certain standards and certain questions that I am going to take you through. And I will help you score yourselves. And that's going to be an invaluable exercise, because that's a worksheet you can take back to your organizations and tell them, guys, I've got a roadmap now. Let's start doing something about fighting fraud in our organization. So don't miss that. We're also going to be looking at forensic accounting and global standards on how to fight fraud. I'm going to do, maybe in the 4th webinar, some examples on how to deal with fraud risk management. So in the chat section, let me know what are some of the areas that are of interest to you. If I get an overwhelming feedback in 1 or 2 particular areas, I'll choose those. Otherwise, I'll choose 1 or 2 of my liking, and we'll actually go through how to do fraud risk management in your organization. And that should be very interesting, not to miss. We'll also look at an overall fraud and corruption control system. We'll do a walkthrough of it. We'll look at code of conduct, and then finally, we'll wind up in our last webinar. So that is what we still have coming for you. Let me take you quickly through what we've covered last time. And this is, we set a scenario last time. And in the scenario, I painted a picture of you in a building surrounded by people, and you found out that somebody was out to get you. And then what were you going to do about it? And I took you through the thought process. You'd obviously look around. You'd look at where the threat was going to come from. You'd look at yourself, whether you were protected. You'd try and get help. After all your analysis, you'd come to the conclusion that this is something you have to deal with, and you would take steps to go after this guy. So just very quickly, just taking you through what we did, because there's a lot of people who missed out on that scenario. I won't go into too much detail, but I'm going to take you through the key learning points. And I want you to try and remember this and take this lesson back to your organizations. This is a very simple way to explain to your managers, to your fellow directors, to your employees, what are the real risks that we're dealing with here? And how should we, what is the kind of scanning we should all be doing? What is the kind of awareness level that we should have? What is the kind of training that we should have? So, right, let's get into it. You are really the asset. And what you don't want to happen to you is you don't want somebody to take you out of the business. You don't want that asset, whether it's cash, bank, stocks. You don't want that to leave, or your debtors, you don't want them laundered. So you want to keep your assets in your business. Who's out to get you? It's going to be mostly your employees, somebody you're working with, but it could also be a threat from customers. It could be suppliers who are colluding with your employees. It could be other people who want to hack your systems. So the threat could be from outside as well. But today we're going to look at threat from your employees. We're going to look at occupational fraud. The other thing is they're going to get you out of the building, which is fraud concealment methods. So this is something we have to be aware of. How do fraudsters conceal their frauds? What are the best ways? And we looked at how evidence can be destroyed and so on and so forth. We'll go have a quick recap on that. In the building, you were in some light rooms, in some dark rooms, and this is now the situation in your organization. You have some poor controls. You have some strong controls. Maybe your IT system, maybe your financial system is good, but you may have staff, very few staff because of your size of the business, and that might be an area where some people are trusted too much. So what are the weak controls? What are the poor controls? Have you done a risk assessment? A fraud risk assessment. This is something which is very easily overlooked. And do you have a plan to minimize your damage when it happens? We also looked at how do we identify red flags? And we started looking at this person, does he have a gun? Does he have a knife? How is he going to attack us? And those are red flags. We came up with a prevention plan. Do you remember there was this Rambo guy? We went looking for this Rambo guy who had survival expertise, and we enlisted his help because he would be able to stop the attacks and he would be able to save the asset. So this is what you need. You need somebody with fraud prevention experience in your organization who's going to help you to avoid any negative consequences. So these were the key lessons. The other thing we looked at was when we made that decision that, this is too risky. We can't just wait for somebody to come and attack us. We have to proactively go and look for this person. This is the difference between a reactive approach and a proactive approach. And when it comes to fraud, you don't have a choice really. Just like you don't have a choice when somebody's about to attack you, you've got to make your move first to make sure you're safe, whether it's getting in a room, getting out of range, and so on and so forth. You have to do it. You just can't wait for this guy to make his move, because when he does, it could be fatal. So the notion that, we've done a little bit and maybe we're going to have, when we have money, we're going to look at this, we can't afford to do this, is really a false notion, and it's one we need to get out of so we understand the reality of the threat. Okay, I was just struggling trying to get my next slide, but I'm there now. So these were the key lessons from that scenario. Now let's look at what we learned very quickly again in the first part of occupational fraud. And I've summarized what we learned in 80 slides on just 3 slides. So I'll take you very quickly through the lessons. First of all, the report that we're looking at is a report, it's called the Report to the Nations, and it's something that the Association of Certified Fraud Examiners, this is the largest body of fraud experts in the world, started in 1996, and they do this report every 2 years. I'm pleased to inform you that we're actually the first out with the 2022 report, I think globally, because the report was released literally 1 week before we had our first seminar, and we're having our second seminar within 2 weeks. So you've got this information red hot off the press. In this study, they looked at 2,110 cases from 133 countries, and the total loss was $3.6 billion. The average loss was $1.7 million, but we're going to be looking more at a median. And a median is, if you have a set of values, the median is the middle number. So if you have, say, for example, 11 values, the median is the 6th number. It's the middle number, 5 up, 5 down. It's the 6th number, the middle number. So that's what we're going to be looking at, the median. And CFEs estimate that organizations lose 5% of revenue to fraud each year. This is a huge number. If you have $1 million shillings worth of revenue, how much is that? That's 50,000 shillings. It's not a small number. We're going to look at 3 different types of frauds within occupational fraud. And the 3 categories are asset misappropriation, corruption, and financial statement fraud. Since ACFE started doing their surveys in 1996, in spite of all the developments in technology and more IT frauds, all of the frauds broadly fall into these 3 categories. So these categories have withstood the test of time. And we're going to specifically be looking at asset misappropriation today, which accounts for 86% of all the fraud and corruption cases. The median loss there was 100,000. In corruption, it was higher, 150,000. And financial statement fraud happens only in 99% of the cases. But when it does, it accounts for the largest losses, nearly $600,000. We're looking at people who falsified their statements, perhaps bumped up their revenues, or falsified their statements because they want to get finance from banks and so on and so forth. That's financial statement fraud. We also looked at this taxonomy. This is the taxonomy of frauds. And we're not going to go through all of them, but you can have a quick look. At the very top, you've got corruption, asset misappropriation, and financial statement fraud. Corruption is conflicts of interest, bribery, gratuities, and economic extortion. Like you do work for maybe the government and they simply don't pay you because they want bribes. Asset misappropriation, you've got cash and inventory. So you've got cash, theft of cash, you've got theft of inventory. Below that, you've got skimming, which is removing cash from the organization before it's recorded. And then you've got cash larceny, which is removing cash from the organization after it's been recorded. Within fraudulent disbursements, you've got all kinds of schemes, and we're going to look at billing schemes, payroll schemes, expense reimbursement schemes, check and payment tempering schemes, as well as registered disbursement schemes. And there's loads of other schemes. Now, what's the point of this slide? The point of this slide, and this is what we have to take home for each one of these slides. What does it mean for us? The reason we need to know these frauds is because if you don't know these frauds, you don't know how you can be attacked. This is the gun. This is the weapon of the fraudster. This is how he's going to infiltrate your organization and take money out of your organization. So it's important that everybody in the organization has a certain level of awareness of these frauds, because in some organizations, without knowing, you could give too much responsibility to one person where he's able to take advantage and perpetrate some of these frauds because he's got access to controls, he's able to manipulate the information and so on and so forth without any detection. So that is really the essence of why we're looking at the taxonomy. Now, what have we learned so far? The first thing is that fraud is not an individual thing. When fraud happens, it happens in more than one type of fraud. So fraudsters, when they committed a fraud, they didn't just stop there. They went and committed other kinds of frauds, and this was in 40% of our cases. We also looked at misappropriation, and what we found was that the highest risk frauds were billing, which is basically removing cash by false invoicing, fictitious invoicing, and so on and so forth. Non-cash frauds, which is theft of inventory, plant, and so on and so forth. Expense reimbursements, which is falsifying expenses and making a falsified claim, fictitious expenses, or bumping up your expenses. And check or payment tampering, which is basically when you have a payment, that payment is interrupted and it doesn't go to the right person, or a blank check is stolen, or a payment is manipulated on your accounting system, and instead of going to your supplier, it ends up in a employee's account or in somebody that he knows in one of their accounts. So these are the biggest kind of frauds from all the frauds that we saw in the taxonomy. These are the four that you can concentrate. Remember the 80-20 rule? So we're looking at the 20% that gives you 80% most juice. What were the most expensive frauds? Billing, check payment, and tempering. And the median loss for those was $100,000. What was the duration of these frauds? And we saw that these frauds happened for 12 months. So 12 months is a long time for a fraud to happen. And one of the reasons why it happens and it's not detected for a period of 12 months, and in some cases much, much longer, is because we have the red flags, but we don't see them. So in this webinar, we're actually going to look at red flags, and hopefully we can begin to identify some of these in our organizations when we start looking at them through these lenses. So what we see in this duration is any fraud over 3 years, the median loss was $700,000. And any fraud over 5 years, the median loss was $800,000. So the longer a fraud is not detected in your organization, the more it's going to hurt you. I mean, some of these frauds are so large, they're enough to totally bring down an organization. And I'm sure you'll agree with me. Again, what are the highest risk frauds in terms of duration? It's the same culprits up there. The most expensive ones also tend to be the highest ones. You've got billing and check payment and check and payment tempering. We looked at a concept called fraud velocity. Fraud velocity is the rate at which the business loses money due to a particular kind of fraud. And what we found is for normal frauds, this was $8,500 per month, which is nearly $100,000 per annum. So you're looking at a large figure which is going out. It's leaking in your organization. You might not know it, doesn't mean it's not happening. It is there. You can almost take it for granted that this loss is there. So what are you doing? And I think what this figure tells you is you can spend a lot of money to try and fight fraud, and there's a return. This is not just something that doesn't have a return. Even though you might not see it, you might close loopholes. Some people might be deterred from taking, even if though they're stealing, they might be deterred in the future, and so on and so forth. So there's a good payback. Concealment methods. What we saw, and why is it important? Because this is, remember, how this guy is hiding the gun or the knife that he's going to use. And what we see here is the biggest concealment methods are that people create physical or electronic fraudulent documents, or they alter documents, and this is both physical and electronic, or they simply destroy or withhold documents. And this happens more so in where people have higher responsibility. So managers, directors, executives, they have the opportunity to alter documents more than junior employees, and they also have the opportunity to completely destroy or withhold documents. The next thing we looked at was fraud trends over 10 years. And we saw that the median loss and both the duration had come down, and this was a good thing. Criminal cases, the trend is that people are not going, it's coming down, and civil cases are going up. So people are taking civil action more than criminal action. We also looked at the trend for male fraud versus female fraud, and we found that men are now outdoing their women even more over the last decade. Unfortunately, men, we got to get our act together. But the gap has narrowed. So women fraudsters now are just as emboldened as men fraudsters, and they're now stealing $100,000 compared with their male counterparts that take $125,000 at a time. Unfortunately, we also found that senior management fraud had gone up and corruption also had gone up, and fraudsters were collaborating even more. Then we looked at the profile of a fraudster. And what we saw was that the biggest risk in any organization came from the owners, the executives, and the directors themselves. They committed fraud in 23% of the cases, which is not a small number because these are the most trusted individuals. And when they committed fraud, the numbers were very large. You can see the numbers there. Managers had a smaller number, and with employees, even though they had employees and managers had higher cases of fraud, the numbers were relatively small compared to managers. So the very people we trust hurt us the most. Duration versus authority. Again, bad news. Owners, executives, directors are able to hide fraud for much longer, 18 months, compared with employees, only 8 months. Tenure. The longer people serve, the bigger they can hurt us. People with 10 years, they had fraud case median losses of 250,000, whereas people who were less than 1 year only had a loss of 50,000. So again, you can see seniority plays a big role when it comes to the amount of loss. Tenure versus authority, same thing. Owners and executives, okay, who have been longer in organizations stole more. So people in CEO positions, directors, stole over $600,000, whereas CEOs in the same positions with a shorter tenure, they are stole about 300,000, so double. What were the highest risk departments? And these are the ones to watch out for. It happens everywhere, by the way, but these are the highest. So in terms of low-hanging fruit, it's operations, it's accounting, it's executive upper management, and it's sales. And also the other point to note is that the longer people stay in our organization, the more they try to collude, and the harder it is to detect their frauds. So if you've got a fraudster in your organization and you don't know about it, the longer they're in your organization, the more they're just going to loot. We also looked at gender distribution. In sub-Saharan cases, men accounted for 3/4 of all the cases. And then we looked at the fraudster's age. And what we found was in more than 50% of the cases, fraudsters aged between 31 to 45 years. So that's a high risk group. But look at fraudsters above the age of 60. They only accounted for 3% of the cases. These are our wazés, but they stole the highest. They had resulted in the highest damage to the organization, 800,000. Education also played a role because the more educated people also had higher cases. And then collusion was the same thing. When you had more than one fraudster, it resulted in a higher collusion. When you had 3 or more fraudsters, the collusion went up even more. We also looked at criminal background and employee history background. And what we found was in 87% of the cases, the guy did not have a criminal background. And for employees, in 83% of the cases, they had never been punished or terminated. So now, let's go on to our game today. And we're going to role play. Let's play corporate fraudsters. So here are the roles for all of you. What I want you to do is in your chat box, as soon as I start telling you your role, you've got to start typing in the answers that come to your mind, the top 3 answers. Okay, so don't wait until the whole exercise is finished because I'm not going to pause for a long time at the end. I'm just going to continue. So as soon as you have your role, you start typing in the chat box. And at the end, my good friend Moses is going to go through all of the responses that we've received, and he's going to analyze them in the time that he's got. And he's going to come back and he's going to share some very interesting insights. So let's start. The first role. This is the role of the dishonest boss. Now, if your first name begins with A and F, you have to assume this role for today. You are the dishonest boss. And you've got problems. So what are your problems? You've got either financial problems, maybe your business is not doing well, maybe you're not meeting your targets, maybe you've got pressure from competition, or you've got personal problems, you just need more money, or there are regulatory pressures, and you have a low moral compass. So basically, you're right for the role, you can commit some fraud against the organization. So what I want from you, dishonest bosses, is I would like you to write down the top 3 ways that you can commit fraud for or against your organization. And in a lot of people's mind, they think when they're manipulating accounts, they think they're doing it for the organization. And that's why I've used the word for or against. Yeah. So it's just a frame of mind. So please, guys, if you've understood what you need to do, you need to write down what's the 3 top ways to commit fraud in your organization. So guys, please start writing. And that's what I want you to code your numbers. It's going to be B1, B2, B3. 3 answers. The next, if your name begins with G to L, your first name, you are the despot. Now, do you know who's a despot? A despot is a ruler with ultimate authority over his people. And it's a ruler who acts in a cruel and oppressive way. And I bet you we've got a lot of despots in our organizations. So for today, you are going to play the despot. You use your position in a cruel and oppressive way over your subordinates. And what I'd like you to do is to give us some of your tools. Give us the top 3 ways that you oppress somebody in a work situation. What are the things that you do? You're the expert, you're the despot, you've been doing this for a long time, and your numbers should be answered D1, D2, D3. Right, please start typing in the chat box. Next, the time bombs. If your first name begins with M to R, you are our time bomb for the day. You've reached a point of no return. People have been messing you around, and you've reached the point of no return. And something's happened, and it's the last straw that's broken the camel's back. Now, I want you to tell us, what are these 3 triggers? What are the 3 things that have really, made you lose it? You've just gone over the edge. You've fallen down the cliff, and there's no way to bring you back. So we want to know, we don't want to know about what you're going to do. We just want to know about what's caused you to get there. So we want you to write down the top 3 triggers that might turn you into a rebel against your organization. And your answers should be numbered T1, T2, T3. Please start typing your answers into the chat box. All right, folks, the last guys. So if your name begins with Z, from S to Z, your first name, you are the exploited for today. Some people will immediately identify with this role, and I don't blame you. Right, so just means you're going to do a fantastic job giving us some answers. You've been wronged, and it's time to get even. So what are the top 3 ways to get even with your boss or your organization? And your answers are going to be numbered E1, E2, E3. So please, guys, get cracking. And if you need a little bit more time, it doesn't matter. But like I said, I'm not going to pause. So you're just going to have to multitask for the few seconds that it takes you to write down these numbers. And some of you will be very good at multitasking. I'm sure the ladies will be very good at that. And some of us menfolk are going to struggle. But please, guys, just do your best. Fraud risk management and people. I played this slide the last time, and I want to go through this in a little bit more detail. I want to bring this message home. How do honest and dishonest people behave differently in an organization. Now, look at the numbers there. There's some research about how honest we are. People have put figures of 13%, for example, for pathological liars, people who just can't avoid, they can't stop lying. They just pathological liars. And that's 13%. And then for honest people, it's between 10 to 15%. And situationally honest people, these are people who will behave themselves given the right circumstances. So if we were to use these figures, let's say we've got, start with us first, so the message comes home. We're 800 people today in this webinar. Let's look at the dishonest people. 10%. Let's assume we have, and I'm not saying we do, we obviously don't, we're all very, very honest because we're attending this webinar, so we're different. But let's assume for a moment that we have a normal sample even today. So there's 10% dishonest people amongst us, 10% people who we could term fraudsters. That's 80 people in our group. Let's look at the honest. Again, 10% to 15%. So 80 to 120 of us are honest. So if you take 80 and you take another 120, that's 200. That leaves us with 600 people attending today's webinar who are situational. And what I mean by this is you have the potential to commit fraud. 600 of us. So this fraud concept is not a foreign concept. It applies to all of us, except for that very elite 10 to 15% who are honest. The balance of 85% of us are all potential fraudsters, given the circumstances. And now let's look at what could happen. Let's look at some of these traits. So let's start with honest people. They will always do the right thing, and they represent the lowest fraud risk. They're driven by high moral values. They address social and political setbacks as learning opportunities and challenges to overcome. So when something happens, if they have an excruciating or unexpected financial need, they will work overtime. They will hold 2 or more jobs. They will cut back on their expenses, and they won't resort to fraud. Instead, they'll seek help from family and from friends. If they come across weak controls, they will notify somebody immediately. If they see that somebody might take advantage, they're not going to think about, hey, man, let me have a go here. No, they won't. They won't exploit the organization's weaknesses. Instead, they'll communicate their finding to someone who can take corrective action. Now, why am I telling you this? Because some people in your organization will behave like this, and you need to understand this group of people may be potentially honest. Let's look at the red guys, the dishonest people. So these guys, they're just dishonest. Something's happened in their life and they've gone off the edge. They've taken to a life of crime. And if you let them into your organization, they're going to steal from you. So they represent the highest fraud risk. They will seek opportunities to defraud unsuspecting victims. And they will do this by testing the boundaries to determine management's tolerance for deviations from company policy. They will constantly and continuously search for loopholes and weaknesses for personal gain. They will question authority and rules, and they will lie. And they should never be placed in positions where they control company assets, because if you do, you've basically subjected yourself to massive fraud. And in extreme cases, they suffer from psychological conditions. We talked about pathological liars. Yeah, these guys suffer from the same conditions. They may seek power, they may seek success, they may seek recognition and grandeur. Dishonest employees, they will ignore the organization's attempts to create a positive, productive, and controlled work environment. And they will constantly search for ways to beat the system. Now let's look at situationally potential, the common man, the 600 amongst us, guys. Generally, we're honest. we're disciplined, and we're committed. We make a conscious effort to comply with the organization's policies and procedures. However, we are susceptible to break the rules. I'm using this term "we" very deliberately here. If the organization's culture condones deviations from policy, we may follow our peers in those practices. So if we find there's other people taking advantage, and they're doing stuff that's unethical, it's immoral, it's fraudulent, and we know that the organization really doesn't care. This happens a lot in government, for example, where in particularly those departments, you look at police, you look at other departments, which every year when there's a corruption survey, they're at the top of the list. So when the tone at the top is wrong, then everybody else just follows because the culture's there. They need reminders, or we need reminders. We need reassurance, we need guidance, and we need follow-up to ensure that we are continuously made aware and that we continuously comply. So we need that guidance. And when management fails to document or to provide training or to sanction unethical practices, then fraud risks grow rapidly in an organization like that. So we may follow the explicit organizational rules, but we disregard the spirit of the law. This is the big group. So what do we benefit from? How do we control us? We benefit from effective controls. We benefit from a strong tone at the top. We benefit from visible leadership. We benefit from clearly documented policies and frequent audits. We represent the largest percentage of the company, the organization's population. And therefore, organizational policies, procedures, internal controls, they have to take a risk-based approach to fraud and consider this portion of the workforce as a potential fraud risk pool. Now, some of you are internal auditors. Guys, message for you. You can pick out the good internal auditors from the ones who are ordinary, because the ordinary ones will be very good at looking at financial controls. The good internal auditors won't just stop there. They will review the organization's employment practices. They will look at the tone at the top. They will design surveys to assess the tone at the top. They will design surveys to assess the employees' understanding of the word and spirit of the law in policies and procedures. So, advice for internal auditors, you need to become HR focused as well. Coming back to the Report of Nations. Now let's look at background checks on perpetrators. Was a background check carried out on perpetrators prior to hiring? And what we've seen is in 57% of the cases, yes, there was a background check. But look at that other number, 43% of the cases we're not doing background checks. And this is huge. So how do you know you haven't got that 15%, that 15% or 13% of fraudsters? If you're not doing background checks, you've just left yourself completely open to fraudsters walking into your organization and committing any kind of fraud. But the interesting thing about this is, of the 57 people who did background checks, 21% found a red flag, but they didn't do anything about it, and they still hired the person. And what this tells me is we really don't understand what red flags mean. Sometimes they could be staring us in the face and we completely overlook them. So what sort of background checks were done on these perpetrators, specifically prior to hiring? And what we can see is 45% of cases did an employment background check. In 40% of the cases, there was a criminal check. In 30% of the cases, there was a reference check. And in 30% of the cases, there was education verification. But I mean, all of this is extremely low. So these are low-hanging fruits. It's easy to do a reference check. It's easy to do a background check, guys. If you're not doing it, start. These are cheap, low-hanging fruits for all of us. Let's look at the primary internal control weaknesses that contributed to occupational fraud in the survey that we're looking at. And what we saw there is in 29% of the cases, it was simply a lack of internal controls. the controls were not there. What we're saying is every third person that comes into the organization could walk through that door. That's what we're saying. It's 30%. So 1/3 of our controls were lacking. That's a frightening number. In 20% of the cases, there were controls, but those controls were overridden. And this is primarily done by managers and also by executives. But also, if you may have employees at the lowest level, at clerical level, but if they're given too much responsibility and there's not adequate segregation, then they also have the opportunity to override existing controls. And then there was lack of management review and poor tone at the top. Let's look at the top 3 internal control weaknesses by fraudsters' position. And this varied. So if you're an employee, they exploited the lack of internal controls. But look at down at the bottom, owner, executive. For them, it was poor tone at the top. So the lesson for us, if we're at the top, don't mess around with people at the top. The tone at the top has to be right, because you're now sharing the room with people, who you have to trust. You have to give them access to information, to documents, to controls. And sometimes they have the ability to override. They have the ability, and really you need to have the right tone just to keep them on the good side. That's the lesson from this particular slide. How often do perpetrators exhibit red flags? Now, basically, in all of the surveys done by ACFE since 1996, these red flags were noted, and these are the red flags that they looked for in all of the cases that they investigated. So what I'd like you to do today is, when you get this recording, make a checklist of this. All those titles on the left side, make a checklist of them, and then create some awareness training around those checklists. Let's go through them. Living beyond means. This has been the #1 red flag in every one of ACFE's studies since 1996, since 2008, I think. So 40% of the cases, and because we know that a fraud will go on for 1 whole year, that's the median, 12 months. So we've got plenty of opportunity to pick on red flags and stop the fraud before it actually happens. Let's look at some of the others. Financial difficulties, unusually close association with vendors, customers, control issues, unwillingness to share duties, irritability, suspiciousness or defensiveness, bullying, intimidation, wheeler-dealer attitude. There was also HR-related misconduct by the perpetrators. And in 50% of the cases, they were red flags. And when we looked at those red flags, some of the HR-related issues, so this is now not to do with financial, it's not to do with internal control, it's to do just with HR. So again, internal audit people in HR, chief executives, look at some of these things. Fear of job loss. Have you created an environment where people are afraid to lose their jobs? Poor performance evaluations. Denied raise or promotion. Cut in benefits. Cut in pay. Actual job loss. This is a slide again on the behavioral red flags, and you can see the top 8 ones. We just went through them again. 76% of all the fraud cases exhibited one of these behaviors. So lots of opportunity once we're trained to be able to identify some of these traits that fraudsters carry with them. And you can see here the trend. Living beyond your means has been the #1, then financial difficulty, and so on and so forth. That's the trend from 2008 to 2022. In the C-suite, we're looking at chief executive now. These were the 5 top red flags. Bullying and intimidation was the biggest one. Control issues, wheeler-dealer attitude, pressure from within the organization, and then finally, legal problems, past legal problems. Now let's look at red flags, the difference between men and women, female fraudsters and male fraudsters. The numbers in red are attributable to the female fraudsters, and the numbers in blue are attributable to the male fraudsters. So with female fraudsters, more of them displayed living beyond their means as a red flag, and also financial difficulties. They love to spend on themselves or to display their wealth as soon as they acquired it. Men were a little bit more discerning. They didn't actually show it as quickly as their female counterparts. And also, if they had recent divorce or family problems, those also showed themselves, manifested themselves quicker in the work situation. For men, it was a little different. Their red flags, the highest top red flag was, compared with women, it was unusually close association with a vendor or customer, a wheeler-dealer attitude, bullying or intimidation. Did job uncertainty during COVID contribute to fraud? We know COVID was very different for all of us. We were working from home. There was a lot of restructuring. Some people received cut in benefits. And what this slide tells us, we're looking at the figures for 2020 and 2022. And what we can see in every one of these are all HR related issues. So in every one of these, it resulted in more fraud. Now, why is this important? This is important because if you're a business that is struggling or you're restructuring, you're in a very competitive environment and you've got some of these HR issues, there's a very good chance that these could be triggering fraud. So this is why this is very relevant to you if you're in that situation. Now let's look at victim organizations. And what we found is that the median fraud in both public and private companies was about 120,000, but 69%, over 2/3 of all frauds happened in these two organizations, whether they were private companies or public companies. Not-for-profit companies only had 9%, and the median was 60,000. But again, not-for-profit companies are smaller companies, so that loss also makes a big dent when it comes to them. And when you look at government, we split government because government, by its very nature, is quite different in terms of budget at the national level compared to the local level or the provincial level. The staffing is very different. The resources that they're allocated is very different. So we analyzed government a little further. And what we found is that at the national level, 46% of all the cases we investigated were at the national level. So that's where most of the fraud happens in government. And it happens, the losses are much larger as well, at 200,000. Compare that with frauds at local government, where the losses were, at provincial government, where the losses were only 56,000. So at the national level, we found the frauds were 4 times the size of provincial or state level. Interesting statistic. Next, we looked at the size of organizations. And what we can see here is that all types of organizations were affected by fraud. It didn't matter whether they were small organizations with less than 100 employees or whether the organization had more than 10,000 employees. The medians were quite similar. And the cases, the frequency, look at the percentages on the right. Those were quite familiar as well. So this reinforces the fact that it doesn't matter whether you're a big organization or a small organization, fraud is in your organization and you just need to stamp it out as quickly as possible. We get the same message when it comes to revenue. It doesn't matter the size, okay? Very large companies with over $1 billion had median losses of 150,000. Small organizations with revenues of less than $50 million had a median loss of 100,000. But there were more cases. 38% of all our cases came from small organizations. Why is this important? This is important because in smaller organizations, you've obviously got the problem of segregation of duties. You're going to have fewer employees. You're going to have the issues where you have to trust people a little bit more. And that's why it's very important that we have more controls. And you'll see in the forthcoming slides that exactly the opposite is true in small organizations. Now let's look at median losses by industry. And we can see that real estate had the highest median loss at $435,000, followed by wholesale and trade at $400,000, and then transportation and warehousing, and then construction, and then utilities. Next, let's look at how fraud schemes vary with organizational size. And what we can see here is that in the larger organizations, there was a lot more fraud than in the smaller organizations. And this was true in almost every single case, except for, I think, check and payment tampering, which was higher in small organizations, and also skimming. So look at fraud and corruption in larger, 50%, 54% of the cases compared to only 24% of the cases. So the larger the organization, the more susceptible you are to corruption, billing frauds, check and payment tampering frauds, and so on and so forth. This is a particularly interesting slide. This is your median loss and your number of cases by industry. This is really important because if certain industries have much higher incidences of fraud and they detect them much quicker, financial industry, for example, they detect it much quicker as well. Manufacturing is another one, and government and public administration. If you look at the number of cases, we had the highest number of cases in those three industries. But then the median losses we just saw were in different industries. Real estate, for example. This is another very good infographic. And what this does is on the left side, you've got the industry, and up on the top, you've got the type of fraud. So take this slide when you get your training recording, take this slide, okay, and use this to create a similar fraud risk profile for your organization. This is from the survey. Yours will obviously be different, but this is a good guideline. If you haven't done fraud risk management, the dark areas show you where to start. So for example, if you look at manufacturing, their biggest risk is corruption, but the second biggest risk is billing fraud. If you look at information technology, for example, their second bigger risk at the bottom there, 33% is non-cash. Cryptocurrencies. We also looked at cryptocurrencies, and we know, for example, now with blockchain technology taking mainstay in organizations, we also know organizations are using cryptocurrency as part of their assets. They're actually dealing in cryptocurrency, they're storing cryptocurrency, they're trading in cryptocurrency, and so on and so forth. So we also looked at how cryptocurrency schemes happened in organizations. And what we found out was in 48% of the cases, bribery and kickbacks were made using cryptocurrency. In 43% of the cases, they converted the misappropriate assets, the assets that were stolen, they converted them to cryptocurrency to get them out of the organization. In 35% of the cases, they laundered the proceeds through cryptocurrency. And then the rest you can see down there. Let's now look at fraud detection. Why is this important? Fraud detection is really, really important because this is the heart of fighting fraud. This is your engine. So the reason every one of us needs to know all about fraud detection techniques at the entity level and also at the internal control level is because this is where you can minimize your fraud loss. If you can catch your fraud quicker, if you can stop people from committing fraud in the first place in critical high-risk areas, you've already begun to win the war against fraudsters. So again, make a note of these things because this is how fraud is. So if you want to make a checklist, this is your checklist for fraud detection. All the things on the left there, that's your checklist. The key message from this particular slide is that in 42% of all the cases, frauds were detected by tips through whistleblowing. So this is the biggest way to detect frauds. Internal audit, management reviews, everything else, document examination, they're all important, but they pale in comparison to tips. So we analyzed tips a little bit further. Where are these tips coming from? And what we found is they were coming from employees, 55%. But look at the others. You got 18% from customers, 10% from vendors, and right down there, 3% from competitors. So what this tells us is 30% of your tips are coming from external people, people who are not part of the organization, your customers, your vendors, your competitors. So what this means is when you've got fraud awareness programs, when you've got any sort of reports, things that you're doing, you can't just target it to your employees. It's got to go out. You've got to get these messages out to all your other stakeholders as well, because they provide a critical role in fighting fraud, because they provide the tips. Let's look at median loss and duration by detection method. And some of this is pretty basic, it's pretty obvious. The areas in pink are the passive detection methods by accident. External audit is, it's in blue, which means it happens once a year. So it's not really passive, but it only happens once a year. Notification by law enforcement, passive. Confession, that's also passive. And everything in light blue is proactive. So you've got automated transaction monitoring right at the bottom. You've got customer surveillance. You've got account reconciliation, management review, job rotation, turnaround. All of these are proactive methods of detecting fraud. And look at what this is telling us. This infographic is telling us that proactive methods result in quicker detection, 6 months at the bottom compared to 23 months at the top. And the losses are lower, because look at the losses at the top there, 219,000 compared with 50,000, $60,000 losses. So definitely the way to go is proactive detection. Hotline reporting mechanism effectiveness. What we see here is 70% of victim organizations had hotlines, and the fraud losses were 2 times higher at organizations that didn't have hotlines. So a hotline is a must. What was the loss without hotlines? 100,000. The loss, sorry, 200,000. The loss with hotlines, 100,000. So you can see hotlines pay for themselves. And now it's not just hotlines, but it's hot email, it's hot internet, it's hot mobile app, hot everything. Let's look at the impact of fraud awareness training. And this is the effect of employees and managers on fraud awareness. Training increases. So once you had training, 45% of the cases were detected by tip with training. So it made your hotlines more effective because you train people. And when you didn't train them, it was only 37% of the cases. Similarly, report of fraud are more likely to be submitted through hotlines with training than without training. Also, hotlines help to detect fraud. So where there was hotlines, the fraud was detected in 12 months, and where there wasn't any hotlines, it was 18 months. And organizations with hotlines are more likely to detect fraud by tip. So when you had a hotline, as well as awareness training, then the detection rate went up to 47%. And without hotlines, it was only 31%. Next, let's look at large organizations. And these are more susceptible to detect fraud by tip compared to smaller organizations. So you can see 44% of all the cases when large organizations had tips were detected, compared to only 33%. So obviously in larger organizations, it becomes even more important. Important in all of them, but in large organizations, it's more important. And let's look at the number of cases over the last decade. And what we can see here is that organizations are definitely taking on to tips, onto hotlines. This has been implemented. It's increased dramatically, but there's room for much more, 58%. It should really be 100%. Let's look at hotline implementation and detection rates by region. And we can see in our region, it was 76% had hotlines, and the detection rate was 48%. So in sub-Saharan Africa, we're not doing too badly. Reporting mechanisms. This is a particularly important infographic here. And what we can see is from 2020 to 2022, it's changed. From 2008, I think the telephone hotline was the quickest way that frauds were reported. But look at the change now. The light blue line and the light pink line have overtaken the dark blue line. That's web-based online way of reporting and email ways of reporting. So what this tells us is we've got to make these ways accessible, because more and more employees, stakeholders are resorting to reporting fraud on internet, web-based forms, on mobile phones and via email, as opposed to just on telephone. Parties to whom the whistleblowers report. And these are now parties excluding the hotline. So you have a hotline, but if they didn't report to the hotline, who did they report to? And this is really interesting. 30% to direct supervisors, 15% to executives, 12% to internal audit. You can see people can just report to almost everybody. And what's the lesson in this? I think the lesson here is, even if you have a hotline, everybody in the organization has to know what is your reporting protocol, because really, ideally, they should be following the protocol. Some of these reporting mechanisms, for example, to law enforcement or to regulator, could result in potential serious damage to the organization. So we've got to educate our people on the correct mechanism to report any allegations of fraud or instances of suspected fraud. Anti-fraud controls at victim organizations. Again, this is a lovely checklist that you should take, and you should compare this with your organization. But let me just draw your attention to the bottom. Look at the bottom 3 or 4. You've got surveillance there. You've got surprise audits. Yeah. You've got proactive data analysis. You've got movement, job rotation. These are the low-hanging fruits. This is what a lot of organizations are not doing. And you've got an opportunity and rewarding whistleblowers. Organizations are not doing that. So that's the low-hanging fruit right at the bottom there. Take this checklist and use this in your organizations going bottom up. Effectiveness of internal controls. The presence of internal controls is associated with lower losses and with quicker detection. I think we've been through all this. The next thing we looked at is, how does the presence of anti-fraud controls relate to median loss? And this is a very interesting graphic. Yeah, the blue is the median loss when you have the control, and the light blue is without the control. You can see everywhere here, the loss is much larger when you don't have controls. But what I want you to take away from this, you've now got the checklist at the bottom. But what I want you to take away from this is the 4 or 5 bars at the extreme left. We're looking at job rotation, hotlines, surprise audits, protective data analysis, monitoring, audit, anti-fraud audit, fraud risk management. All of these have got the highest payback. So these are the things you need to implement first. This is the same graphic, but again, just in terms of percentage reduction of fraud on the extreme right, same thing. And then you can see the effect of controls and not controls. Same graphic, just in numbers. Here, let's look at this. And this is now how does controls affect duration of fraud? And you have the same thing. Okay, that in every single case, the frauds came down when you had controls as opposed to when you didn't have controls. But again, let's look at the low-hanging fruit. And the low-hanging fruit are on your left-hand side. So let's look at proactive data monitoring analysis, surprise audits, job rotation, mandatory vacation, formal fraud risk assessments, dedicated fraud department, function or team, rewards for whistleblowers, implementing a code of conduct. That's where it is. And these are all soft. These are easy to implement. They don't cost a lot of money, but they give you the biggest payback. The same thing in numbers. I'm not really going to dwell on that. Anti-fraud controls in business. What we can see here is small businesses had less of these controls. This is the same checklist that I asked you to copy and take to your organizations. So you can see here, because of the small size, smaller organizations, are doing a lot less of every one of these things. So there's a lot of areas for improvement in small organizations and a lot of benefit to be drawn straight away, but also for large organizations. Modifying anti-fraud controls following a fraud. What we can see here is that Once bitten, twice shy. That's what we say. And we can see here in 81% of the cases that organizations did modify anti-fraud controls, following a fraud, because that's what fraud does. It shakes the organization. So don't wait to be shaken up. Do it before you shake, before the fraudster does it for you. And your median losses, you can see again, it took a big hit for people to actually do this. So don't wait for that hit to come to you. Most common changes made to anti-fraud controls. So when people did modify their controls, what did they do? They looked at management review. They did a bit of proactive data monitoring. They started these processes if they didn't have them, or they improved them. Surprise audits, internal audit, anti-fraud training. But you can see some of the low-hanging fruits are missing from this. I want you to go back when you have time and look at what some of those are. Yeah, it's the clue is in there. When you compare that with the list, you'll see what people did and some of the easiest stuff that they missed. Which types of organizations were most likely to modify their anti-fraud controls? Well, not-for-profits, because they probably have the smallest budgets. They also have the most to lose. But you can see governments there really, they fell behind. So we'd like our governments to be a little bit more proactive, and fight corruption and fraud like the rest of us. COVID's effect on occupational fraud. What we can see in this particular slide is that it did affect fraud. When you look at organizational staffing changes, 42% of all organizations were affected by that. They cited those three reasons, these reasons as a reason for fraud. So during the 2020 to 2022 period, this 2-year period, they cited these reasons, and these are a lot of these are HR reasons, but they cited these reasons. So this is something we can learn. We can look at these reasons and we can modify our controls accordingly. Fraud in sub-Saharan Africa. We had a big representation, and you can see, if you're, depending on your country, and if you're from Africa, sub-Saharan Africa, you can see how many cases were investigated. We had the same results. So I'm really not going to dwell on these. We're looking here at what kind of frauds were committed and how they were detected. It's similar trends compared to the rest of the world. We're looking at what kind of frauds were the most common, again, similar trends. So I'm not going to dwell on this. We went through this just now. Authority level and fraud in sub-Saharan Africa. Here, the numbers were slightly different. You can see, our numbers were smaller. So at the executive level, the median loss was 250,000. At the employee level, the median loss was 30,000. How do victim organizations punish fraud? Now, this is the last thing we're going to talk about. So once the fraud has happened, what did the organization do? How did they deal with it? So the first thing that happened was 61% of all cases ended up in termination. In 12% of the cases, the perpetrator had just left already. It wasn't discovered when the perpetrator was there. In 12% of the cases, there was probation or suspension. And then in 11% of the cases, they were permitted to, or they were required to resign. And in 10% of the cases, they came to some kind of settlement agreement. Internal punishment. What we can see in this slide, and look at the light blue bar there. That light blue bar is about owners, executives, and board members. They tend to get off easiest when they commit fraud. They're the worst offenders, but only 40% of them were terminated, compared with normal employees, 73%. So perhaps we need to be a little bit tough with our executives and with our board of directors. Also looking at the infographic at the bottom there. Again, look at the light blue. 15% of them received no punishment, compared with only 3% when it came to employees. Really, nobody should commit fraud and not be punished. And in 26% of the cases, there was a criminal referral as well as a civil suit. But in 42% of the cases, they did not have a criminal referral, and they did not file a civil suit. When there was civil litigation, the median loss, so it took about $300,000 in losses, okay, for there to be a civil litigation. And when there was civil litigation, 39% of the cases were settled. And look at the numbers. This is interesting. Look at the numbers. 29% in favor of the perpetrator more than in favor of the victim, and 27%, so almost equal. So this means if you have a fraud and you go after the guy, you've got a 50% chance, okay, that you're going to prove it was a fraud, and he's got a 50% chance to prove actually it wasn't a fraud, even though you've lost the money. Interesting, isn't it? The median loss for those who declined to file civil suits, 70,000. So you can see the guys who did take action did it because their losses were much larger. Now let's look at criminal referrals. And this happened in 58% of the cases where the median loss was 200,000. In 44% of the cases, there was a pleaded guilty or there was no contest. And in 22% of the cases, they were convicted. The fraudster was convicted at trial. And at 17% of the cases, they declined prosecution, or in 10% of the cases, they were acquitted, which means when you decide to go the criminal route, you have a good success rate at 66%, which is basically perpetrator pleaded guilty plus those convicted. And what were the median losses for those who declined to refer? 50,000. So organizations that lost a little bit less, they simply didn't bother. Why do organizations defer? So we asked the organizations, hey, you didn't take any action. You know, you didn't file a civil suit. You didn't file a criminal suit. You had a fraud case. Why did you not file? Why did you not take action? So these are the responses. We may not be happy with these responses, but these are the responses we got. In 50% of the cases, they said internal discipline was sufficient. In 30% of the cases, they said for fear of bad publicity. 28% of the cases, they said private settlement, and 20% of the cases, it was too costly, and 10% of the cases only for lack of evidence. So it seems like a lot of them had the evidence, but didn't want to go through the pain. Trend to 2022, this looks at the trend, you know, why organizations declined to refer cases to law enforcement. And what we see here is interesting. This infographic goes to 2020 only, but we can see the same trend in 2022, that people cited internal discipline as sufficient, and they didn't do it for fear of bad publicity. That's actually coming down. A response to fraud, I think we've already looked at that. Those are just the highlights. Yes, 52% of organizations did not recover from fraud. We've looked at this as well. How does it vary? It doesn't actually vary very much. It's a global phenomenon, pretty similar. Sad message for sub-Saharan Africa. This is the situation. Okay, in 52% of the cases, we recovered nothing. Only in 11% of the cases, we had a full recovery. And in 37% of the cases, it was just a partial recovery. So once you've lost your money, remember that case? Once the asset is out of the building, you're not going to get it back. Only 11% of the time, you got it back. In 37% of the time, you got the car back. It didn't have the engine. It didn't have the wheels. You know, everything was gone. You probably just got back a shell. So that's the situation. Fines against victim organizations. So in addition to the losses from fraud, there are fines as well. Some of the cases, you know, victim organizations got fined because maybe they didn't tackle bribery. It's a requirement, okay, for if you fall under certain jurisdictions. If you're a listed company, it's actually a requirement to fight bribery or non-compliance in terms of your finances, financial compliance. So these are the fines. So in addition to the fraud, there were fines from regulators, and you can see some of the fines there, and also the number of cases. And that really brings us to the end of today's session from my part. I'm going to hand over to Moses. I hope you've enjoyed this session. My apologies, it's dragged on for a little bit longer. It was scheduled to go on for 1.5 hours, but I think I got carried away in some sections, going into some of my own stories. These are some of the services we provide. I'm not going to delve into those. You know, we do provide a whole range of services, particularly in this area where you've got disputes, where there are cases going to court. We work a lot with lawyers, you know, in terms of dispute resolution, in terms of acting as expert witnesses. Obviously, we do investigation. We also go through IT systems and do computer forensics as well. Please, if you do have concerns, pick up the phone, call me. You will find my email as well as my phone number in my profile. So when you get the presentation, all of my details are on the contact. And over to you, Moses. And thank you, and it was a real pleasure.
Thanks, Zahir. After part one of the participants called me and told me part one was fantastic. Now I wonder after this what they will tell me. They might call. I suspect that they'll call me and tell me we have no words to describe part two, and the same will happen for part 3 and 4. But quite interesting statistics you've shared there, and insights and lessons that we've learned from this. And for me, the most telling one was that if we have our internal systems working efficiently, then we have a bigger chance to avoid fraud, to work against fraud. And so I think it's important for all the organizations, for all of us here to see that our internal systems are strengthened. We are strengthened within our organizations. So Zahir, there's been a few questions that have come in the Q&A session. The Q&A section, I am sure you're able to read on those. Would you like me to read them, or you can read them?
No, that's fine. That's fine.
Okay.
Yeah. So
you can take those one in the meantime.
Yeah, I think one of the questions that I liked was on how do you promote fraud awareness in your organization? A lot of the comments actually are about the fraud risk management, and thanks guys for your comments. I will look at them. A lot of people have said manipulation of financial reports, collusion with major customers, collusion with suppliers. So this gives me some homework. Thanks, guys. I'm going to take all these comments on board. And when we're looking at the fraud risk assessment, I'm going to delve into 1 or 2 of these areas. So I greatly appreciate your feedback. Thank you very much. And hopefully we'll get to how to deal with some of these areas and stop fraud in these areas. But the question was, how do you promote fraud awareness in your organization? I think one of the easiest ways to do that is to invite an expert into your organization to talk to all your employees. When you have your trainings, whether it's your annual training or anything else, have a session that deals just with this. Don't exclude this. Include fraud awareness, dealing with fraud in your organization. Don't be afraid to talk about this. Invite an expert and let them tell you what are the best ways to avoid the common mistakes that are made, for example, when trying to prevent fraud. A lot of organizations try, but they don't get it right, and fraud still get through. So by all means, call an expert to some of those seminars that you have, some of your own trainings, and benefit from their experience. Thanks, Moses. Back to you.
Thanks, Zahir. A couple of people have been asking for the recordings. We are surely going to share this recording after the presentation, as we share the certificates as well. For those who did not receive the recording for part 1, please write to us, write to Zahir, write to our general emails. We will share with you the recording for part 1. And if you have missed parts of part 2, you will receive that as well. I must say also, for those of us who have attended this, the over 700 participants, this guarantees it sort of entitles you to part 3 and part 4 of this webinar series. So we'll surely be sharing with you the reminders for you to log on as and when we have them scheduled. So when it comes to the exercise we did in the beginning, there's been a lot of responses.
Yes, I'm looking forward to hearing about this.
Yeah, many of them.
Because I didn't have the opportunity to go through the chat.
I'm sure you will even after this. And I think there's a couple of them we need to pick on and explain further and dwell on in the next episodes. But about the 3 ways we commit fraud, for each of them, I'm just picking out the top 2 that came out very frequently than the others. The 2 of those was irregular invoicing and creative accounting. When it comes to how you oppress someone at work, which was the D series of the answers, a number of people said unfair appraisals, manipulation, and then an interesting one said you give your subordinates a lot of work. So for
Very
those of you
interesting.
who
Too much work and too little pay.
absolutely. So for those of you whose supervisors are giving a lot of work, you might need to visit and see if they actually think they are being oppressed. The reasons why you would turn to a rebel, to your organization, a number of people said unfair employment terms, a number of people said lack of recognition, and the obvious one was poor pay. So if you're not paying your employees right, you might need to rethink. Otherwise, you might be hosting rebels in your organization. And lastly, when it comes to how you would get back to your boss, I think this was the most interesting one for me. The responses here were hilarious. Someone mentioned that they would quit without notice and carry all the clients they brought to their organization. And this is the point I decided I will not tag names to the responses. Someone also said they would leak their strategy to their competitors. So for the bosses on the call, you might need to be careful on how you treat your subordinates. So Zahir,
Yeah,
having said that,
so the losses are not just, it's not just fraud, and they could do a lot more damage in other ways.
yeah. So having said that, Zahir, if we forget anything, what's that 1, 2 things that you think we should not forget and should carry home from this conversation as we close?
Yeah, I think the message to take home really is this issue, fraud and the loss from fraud is real. You may be a very small practice, even 20, 30, 40 people, but still there's going to be fraud just by the nature of human beings. I take you back to that slide where we talked about fraud and people. So it doesn't matter, what kind of business you have, whether you're a practice, whether you're an organization, whether you're a not-for-profit organization or government, it doesn't matter. Yeah, if you want to protect your wealth, you want to protect your business, this is something you cannot decide to ignore. I think that's the message. That's the key message.
Thanks once again. And we know that a number of organizations tend to treat fraud occurrences like some sort of shameful disease. They never talk about it for understandable reasons, really. At times it can attract the regulator's attention, reputational damage. But what we are saying is you don't have to struggle with this. At any one point, we are giving you the basics. And as and when you interface with such a situation, feel free to speak to us. We can always support you in one way or another. Otherwise, would like to thank all of you, the over 700 participants that we've had joining us today. It's been a pleasure hosting you, and we hope to see you for part 3 and part 4. We will share the recordings, and we wish you a good evening for those of you in Africa, and a good morning for those of you in other parts. Thank you.
Thank you.